Good afternoon, everybody. How are you? Let's get started. You'll forgive me. Today I have been battling. I don't say a migraine, but just a headache for the better part of the day, preparing some materials for next week, and just want to apologize in advance. I'm not my usual animated self, but if uh, if you're okay with it, I'm okay with it. We'll just take it at a slightly slower pace and lower volume. We have a weird program. It's unlike anything um, I've come across on online. It's based entirely on timing signals and entirely occupies the right hand side of the chart. And so it tells you in the future when to expect buying and selling. And that's, as far as many people are concerned, apostasy. It makes me a heretic insofar as conventional trading wisdom is concerned. Markets are unpredictable. Anyone who tells you otherwise is a fraud. Snake oil salesman, fill in the stereotypical trope here. And so we kind of go out of our way to show that's kind of not the case, and sort of have this superhero approach to proving that this works. And I'm trying to find a Word document so I can open up something here. There we go. It took me a second. We actually give out the times for the market movements 2 days in advance. And this is what really confuses people when they come across it and see for themselves there is in fact an element of predictability in the markets that they trade. And so let me pull that page up for you here. If you've been taking our video demo, you've been following along with these times for the last 2 days, and I want you to see that those are the times that we're referencing. Here we go. I didn't have that ready. I should have. So anyone taking the trial has been following along with backtothefuturetrading.com/warp-webinar-forecasts. And it has a map in time for the markets in advance. So this is an indicator for NinjaTrader. And what it's doing is it's telling us before the market arrives what times to watch for selling and what times to watch for buying. It's pretty heretical if you're a standard lagging indicator guru following customer, right? You don't like to hear that there was a move that was always potentially going to happen if you've invested 10, 20, 30, $50,000 in lagging indicators and gurus that miss those moves or appear after the fact. And so we're going to look in a second to see what actually happened at these times today. These are Eastern times, by the way. It's sort of based on this premise that random is a myth. Random is a myth. We listen to people tell us things after the fact for so long that we start to believe that must be the answer. So Tom, the S&P closed higher and Apple and Nvidia popped. because of some inflation-fueled sell-off rebound. And there's about 13 things in that statement that are unprovable. How do we know that's what happened? What is going on? And Goldman has some stock picks for you if you'd like to know what they think, because the most powerful people in the world love telling nobody's like us things for free. We're all pretty sure Bankman-Fried's going to get out of jail, right? So which is it? It's a bearish trend down here. It's a bullish trend up here. And so you're always off balance trying to sift and sort through the noise. And I think in the randomness of it all, there are patterns that emerge. You can look at things that you don't understand and believe there's information there. If you don't subscribe to random, if you believe there is a higher order at work where very important men in very large wooden lined offices with trophy wives and houses in Martha's Vineyard leave nothing to chance, right? There's information there if you have the right tools. So let's kind of skip right to it. In this experiment that we're conducting here together, we've again given out the times for Tuesday and Wednesday. I'm sorry, for Wednesday and Thursday. On Tuesday, for the S&P, for oil futures, for Ethereum, for the euro dollar, for gold futures, all of these times were published before yesterday and today so that we could come together today to see if it works or not. Well, let's take a look. First thing I want to do is go back and look at our predictions for the daily chart on the E-mini S&P. And these aren't my predictions per se. These are just times that the program has been warning us about now for months and months and months. And last webinar was Thursday, April 5th, and it had warned us to look for selling pressure starting Wednesday, April 10th. You guys remember that? Wednesday, April 10th. How many of you were here in the webinar last week? Quick show of hands. Okay, a few of you. Now, I want to zoom in here and just share some quick observations if I'm, with your permission, if I'm allowed to sort of deviate from the main webinar structure here a little bit. Leroy, Rich, Takahiro, do you notice how far the ES usually moves at the buy times over here? Tim, can you see? There's a fairly pronounced movement, $116, $154, $163. So these are times I believe that institutions are loaded for bear. They push a button, the algorithms fire off. We know they've gotten caught colluding with each other. We know this is the thing. If you're not sure, banks including Barclays, RBS, and HSBC have been fined 344 million euros by the EC for colluding in the trading of foreign currencies. This is 2 years ago. All you have to do is just type collusion. This one's a $12 billion case. involving Bank of America, Barclays, and Citigroup. I've been telling people for 15 years, can I just say this? You can look at my big ugly head for a second. I've been telling people for 15 years that these trading companies collude with one another and push markets up and down at certain times. And to the haters, the mouth breathers and the knuckle draggers out on the forums who said there's no way, I'm a liar, I'm a fraud, here it is. They got sloppy and they got caught. Some of you used to work for these companies and have told me privately that they do this. They call each other on a conference call and they make a plan. Well, here it is. And so when we arrive at the times that this indicator is warning us, hey, this is a collusion moment, a moment where something is likely to happen, lately, the moves have been distinctly large. Excuse me. Until very recently. So, Rich, Tim, look what happens between March 22nd and March 28th. The train starts running out of steam, doesn't it? And the market, which closes, or rather opens at 53.07, closes just about the same point. Huh. What does that mean? What does that mean? Well, here's what it means. It means we showed up to surveil. Let's pretend Goldman and JP and Citibank, Citigroup, Deutsche, they usually get together on this same corner on a Friday afternoon and they do a deal. Right? There's a briefcase, there's another briefcase, there's another briefcase. They all hand in the briefcases for a bag of something and go home. And now, Tim, we show up on the next Friday afternoon and nobody's there. There's one guy, he doesn't have a briefcase, he has a lunchbox. The other guy doesn't have a big satchel, he has a sandwich bag. Something's different. The behavior has changed, right? And so now, coming into the 28th, there's zero gain, meaning nobody really wants to push this thing up, or no one is buying that usually buys at the time they're expected to. And it comes down and finishes up higher, right? Let's really blow it up here. We're going to come look at the 5-minute and the 3-minute chart and a few other markets here. But remember, all of these dates were predicted. We can see April 17th, April 19th, April 24th. They're all in the future. They never change. They never update. So on April 3rd, it's a repetition of the same behavior pattern. Look, it kind of dips down and pulls back up. It kind of dips down and pulls back up. Interesting. So it kind of indicates to me, now I'm not going to pick tops or bottoms, but I just want you to see in comparison to what they used to do on that very same corner with briefcases and satchels, no one's really interested in driving prices higher. In fact, when we get to the selling prices now, it seems like they can't get rid of the stuff fast enough. So watch for that again coming in to April 17th. I also had another chart that I wanted to show you. It's one of my favorite ones because I love to hate this guy now. I love to hate Mr. Musk. And I love telling people when they can short it, in theory. And so the last two times were January 25th. And then the next predicted down move was March 4th. And so if you shorted from here to here, there was a retracement up. If you shorted here and now it's starting to move up, the next time is April 18th. And so we can apply this technique to different markets. We can look at the Tesla daily chart. We can look at markets like Apple. And what is fascinating to me, if you go on my Instagram page or my YouTube page, long before the bull rally that you saw today, I want you to see that I have zero to hide. Can you guys see that video there? I'm going to pause it so you can see that when this video was uploaded, Mr. Murphy, can you see April 1st to April 17th? I told everyone, don't sell it right now. We're long until the 17th. And it makes me furious when we come back and we see what's happening here. Remember, this is where we were in that video. And what did the banks do? They run the stops. They get everybody trapped on the shorts. They come back, they trip out the stops, and they go up here. This wasn't anything to do with inflation. This wasn't anything to do with CPI or PPI or LMNOP. This was market manipulation. This was collusion. And the people you don't think are involved in it are involved in it. Was Nancy Pelosi involved in this move? Was Warren Buffett and Berkshire Hathaway? Right? Oh, he's so sweet. He's like a grandpa that I never had. These guys all dip their fingers in the cookie jar. Well, how long is the move going to last? Until the 17th. And so we can apply this to different markets and get a sense of what's the plan? What do you got planned? How long is this move in gold going to last? How much higher can gold go? Well, when I turn a program loose, it says April 22nd. Tim correctly says Apple is 41% of Warren's company's holdings. You don't think these guys release rumors of things? You don't think Elon Musk has his little folder of fake things to mention? Oh, we're going to have a robo-taxi in August. I'm thinking of making an electric car. I have a robot that can do laundry, but not really. Oh, and we put a chip in someone's brain and he plays Pac-Man now. We didn't kill any monkeys. Sir, 45 monkeys died. Don't mention anything about the monkeys. By the time they figure it out, I'll have said something else. They all manipulate. And so this program is an independent arbiter and says, hey, there's something going on behind the scenes because these times appear in the future and they never disappear, reappear, repaint. They're always there. And so when they tell you why the thing happened, they're trying to cover up and explain away what's taking place. Here's oil prices on a daily chart. You can see the same signals coming up in the future. Pick a stock. It doesn't matter. There is NVIDIA. NVIDIA is long until May 3rd. The sell signal was on March 26th. The buy times for NVIDIA were November 6th, December 11th, January 29th, Friday the 22nd, and then Thursday the 28th. Cryptocurrencies is the same thing. Well, Michael, cryptocurrency, blockchain's different because it's not manipulated by the institutions and it's completely independent, and it's very anonymous, and it's going to be the future. And oh my God, it's as predictable as the other stuff, isn't it? Never mind. Yeah, I was wrong about that. Sorry. When's the next sell time on Bitcoin? Bitcoin is as manipulated as every other market. The institutions are fully ingrained. They're in there. They've got their positions. Mr. Musk has his positions. Tesla has their positions. It's not the people's currency anymore. It's really not. And so we see as we go down to lower and lower time frames that we can predict the movements all the way down to the same intraday levels that you're trading, right? Bitcoin can be analyzed all the way down to a 1 minute perspective. The next moves, 444, 504, 527, 556, 631 on the sell side, 615, 541, 520, 501, and 439 on the buy side. And this is what happens. When can I buy Bitcoin? When JP Morgan buys it here and here and here, you buy it with them. When do I buy Bitcoin futures? Same thing. There's no other way this will work, whether it's on a 1 minute time frame or a daily time frame. I give everyone the times in advance so they know I'm not faking it. I'm trying to get the word out. You've been lied to, right? They lie to us. Did I crash it? I might have crashed it. That'd be funny if I crashed it. Yep. All right. Let's load it back up again. Any questions? Any questions as we go further? While that's loading up, I want to talk about the difference between a signal and a setup. The signal and the setup. A signal is just a raw dot, right? The signal is just a raw dot. It's a time. A lot of people get confused because they think, well, I should trade every dot that appears on the screen. That's not true. It's just a piece of information. And we want to frame that in relation to a trading system, right? What do we do when we get to these times? So let's take a look at the E-mini S&P on the 3-minute chart, and we'll sort of analyze what we could have done at the times that you've had since since Tuesday, right? And just to verify, right? If I click on the forecast for the E-mini S&P 3-minute chart, can everybody see when that was populated? Stanley, can you see that that forecast has been available for 4 days? We've known in advance for 4 days. So that completely absolves me of any guru shenanigans. That completely wipes the slate clean in relation to snake oil infestation. It either worked or it didn't. We can apply these rules, one of two simple entry rules called signal with trend or the puncture trade. I even told you before we got here how we're going to trade the times when we get to them. And so on that 3-minute chart, we now have these times that we're waiting for things to happen. Buying times at 7:51, 8:48, 9:39, 10:15, and so on. Selling times at 9:33, 10:06, 10:21, and 12:27. Well, what do we do when we get there? What do we do when we get there? When we get to the buy times, we're going to buy if they're above the moving average. Our stop will be 1.5 average true range values away from the candle. We'll exit at the next sell time. Can you keep your position on and trail it? Sure. But for the purposes of the dumbest trading system I can come up with, the simplest one, we'll get out by the next sell signal. If the buy signal or the sell signal starts out on the opposite side of the 120 EMA, we'll wait for it to cross over. It can close above or close below the moving average. In this case, if it closes above, we enter at the close with a stop just below the crossover candle. We exit by the opposite time, in this case, the 157 sell. That's a signal with trend. Then we have what's called a puncture trade. A puncture trade says, hey, the trend is up, but there's a sell signal. Well, I don't want to sell because the trend is up. I want to buy. Well, let's think about a double negative here. When someone says to you, I'm not lying, means they're lying. I'm not saying this food is horrible. Double negative. A failed sell signal equals a valid buy signal. And so in the case of a puncture trade, we're saying I would like the prediction at 9:30 to sell to fail. And if it continues to rise, I'm going to buy a breakout of the sell signal's stop. If we hit the stop of a sell signal with trend is a buy signal. It's kind of weird, right? Well, you're going to see it play out here in a second. And if we get to $500, we'll go to break even. Those are the rules. Those are the rules. Okay. When do we start the clock? I don't care. We'll go with what's up here, 7 o'clock. 7:06, we enter at the close of the candle in the direction of the trend. We exit by 7:51, $450 trade per contract. This is all hypothetical, probabilistically, theoretical, all the fun things that I mentioned in the disclaimer when we started. We get to 8:18. If you want to get out just before the econ at 8:30, you made $625. If you were going to ride the lightning and you wanted to stay in the trade, you lost $350. Okay? Then the report comes out. The next signal is with trend at 8:48, and it goes up. It settles by the close of the 9:33 candle at +5. The next buy signal is at 9:39, and it hits its stop, -12. Ouch. Okay. The next sell signal is at 10:06. We exit with $4. The next sell signal hits its stop, -11. Ouch. Now, I'm looking for crossovers. No, 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 no. Yes, cross is over. My stop is below that candle, -3. Waiting, waiting, waiting. And then, Tim, the second crossover occurs on the 11:33 candle. Here we go. If we enter on the crossover the second time, per the instructions I gave everyone before the webinar today, the entry is at 5,205.50 rather, and we exit at 12:27 for plus $15. $12.27 comes, and that's a sell signal above the moving average. We're looking for a double negative, a failed sell signal. That means there's a buy stop right here. So just above the blue line at 52.23, we have a buy stop. My stop is just underneath the candle that punctures the line. If you are long, you have to exit by the next buy signal. So there's $13, 15, 13. And then just like our daily chart, we have these three really big thrusts, long from 136 to 215, another $13. And then Tim, at 245, we hit the stop. Womp womp. Does not puncture the blue line, rolls down at 333, and at 412, man, if you held it, it's the same as when you started. It's not really a trade. So let's vote real quick. Would you have got out before the report, or would you have let it ride? I need 5 answers, and we'll count whatever people say. I'll show you what the vote was. At 8:18, would you have gotten out by 8:30 with your profit, or would you have rode the lightning? A is, okay, 1 out. Anybody else? I'll put whatever you want. I don't care. I need 4 more people. Would you get out or stay in? 2 out. One more person. It doesn't matter to me. I'm just getting a sense of what you guys would do. Out. Everybody says out. Okay. So we won't count that. Plus 9, plus 15, plus 15 plus 6, 21, 24, 34, 39, 49, 52, 62. Let's call that 63. Minus 6 is 57, 54. 57 minus 4 is 53, 43, 42, 32, 30. So at the end of that, from 7 till the close, is approximately $1,500 per contract, following those rules. So this is a trend trading system. It's not the only way to trade, but it gives us a setup to track. It gives us a setup to track. And so when we track those things over large portions of time, we see that certain numbers start to emerge. Inside of a trend trading model with the times, there are some things that we sort of know to be true. There's a win rate somewhere around 55%. There's a profit factor somewhere around 1.5. And so these are all the trades in the Globex session 24/7, Sunday night to Friday afternoon, over nearly 1,000 executions of testing. And so we sort of expect with a trend model to have a profitable setup more than half the time and earn 150% of what we lose on average. That is what my man, Mr. Douglas, calls a statistically relevant edge. There is a random distribution between wins and losses. Trading is a probability or numbers game. We don't have to be right or wrong. We need to exploit a statistically relevant edge. And so there's things that emerge from a predictive model that you can't get from a lagging model, from sitting there watching every tick of every bar. If I know what's coming up, I'm less stressed. I trade less because there's only so many times to watch. I'm taking breaks. I leave my chair, I leave the office, I make a sandwich. Straighten up my office. You break that zombie spell with your computer. I take smaller losses because it's either going to work now or it's not. And when it works, I let it run because I have a time that I'm watching, that I'm waiting for. And so with markets like gold, right, in that same period of time, you can see that emerge, right? Crossover at 640 into 705, 13 ticks. Signal with trend hits the stop, minus 32. Signal with trend to the report, basically 0. Signal with trend finishes where it starts. Puncture, stop out. Oh, it's not looking good. It's not looking good. Stop out. And then there's the puncture. The stop goes under this candle. We never see it. 107 ticks. Signal with trend. 82 ticks. 540. By the end of the day, 415, is 88 ticks. So in a trend trading configuration, these signals 1, 2, 3, 4, 1, 2, 3, 4, 5, about 50-50. But the winners are twice as big as the losers, right? And we can go back and see those same things yesterday. Look at what was supposed to happen in gold yesterday. We had those times in advance. There's nothing here I've created. There's no guru discretion. Short, if you traded the report, punctured through the white line, it went straight down. Short at 9:10. Crossover exit by 10:30. Crossover exit by 11:35. Short at 11:40. Short at 12:35. This 130 bar is off by 1 bar from the actual high. Do you know what market JP Morgan got fined for manipulating? nearly $1 billion, spoofing the market. Precious metals futures. Two former precious metals traders at JP Morgan Chase and Company were sentenced today for engaging in fraud, attempted price manipulation, and spoofing as part of a market manipulation scheme that spanned over 8 years, involved tens of thousands of unlawful trading sequences, and resulted in $10 million in losses to market participants. Are you hearing me when I say these things? Is anyone listening? It's lonely in this office sometimes. You know when your stop gets hit? Guess who did it? What market were they manipulating? This one. Well, if you know they're manipulating it, why aren't you using the times to trade it? Cheat when they cheat. Obviously, they don't care if they get caught because it's still working. As far back as you go, there's the day before. This is Tuesday. Listen to me, YouTube people listening, Instagram people watching. Predicted 4 days in advance, down at 8:05, up at 9:10, down at 10:30, up at 11:40, down at 1:30, up at 2 o'clock, down at 2:45, up at 3:10. Where were the biggest moves of the day? From here to here to here. Well, surely that's the only day they've ever done that. Let's look at the day before. Nope, they did it the day before too. Down at 9 o'clock, up at 9:30, down at 9:45. Down at 7:30, up at 8:05. And it keeps happening. It's still going. There are the times for tomorrow. They're there. All the times are there for tomorrow right now. They're there. When is gold going to stop going up? 7:25 tonight. You still got time, Chris. Any questions about that? Any questions about that? How manipulated are oil futures? These are the times that were published for today, the European and the American market movements. Just look with your eyes. I'm not even going to draw arrows. What did they tell us after the fact? Well, oil futures today were extremely volatile due to the Iranian, Palestinian, Middle Eastern Houthi situation. Really? Well, for 4 days, I've been waiting for a sell at 606, 730, 829, 933, and 1009. Didn't the Houthi stuff happen after the prediction? Didn't the inventory report happen after the behavioral forecast? Well, you know, you have to take into consideration the volatility ratio and the inventory decimal levels of... Shut up. Shut up. Aren't you tired of telling lies to people every day? The answer is no. They love it. They love it. And they all do it. If you don't think your guy does it, he does it the best. If you think the other people's guy is lying and you don't think your guy's lying or lady, then your guy's an even better liar. They're all lying. And it's been happening for years. We've been around for 15 years, and the webinar is always the same. This is oil futures yesterday. Look at the times we were expecting the market to go up. Look at the times we were expecting the market to go down. These times were published. 18,000 people had access to them. And here we are. Did they all work? No. Did most of them work? Yep. How is that possible? It's possible because of the golden rule. Those with the gold rule, and most traders that I meet, I love this picture. It's my favorite picture. Please have it at my funeral if you come to my wake and say, Michael, love this picture. This is how most people trade. I log on to their computer for a consultation and they go, let me tell you how I trade, Mike. Let me show you my charts. I've got a low lag Bollinger Band with a Keltner VWAP integration. I'm looking at the market deltas for the volume across a span of high risk value. Oh my God. How are you not in a mental hospital? What do you got, like 36 monitors? Holy cow. And then I talk to the people here, many of you, ridiculously profitable. I've watched you turn the corner. I get your screenshots. One of you sent one this morning. You hit your goal in 30 minutes and you were done. And when I ask you, what are you doing? You got one monitor, two charts, and like two indicators on the chart, and you're done. And you're trading like this. I'm going to get in when gold is supposed to be manipulated again and see if they do it. It's like that line in the movie Back to the Future when Marty's dealing with Biff and he says, call me chicken one more time and see what happens. Call me chicken one more time. And I'm sitting here saying, I hope JP Morgan cheats again right now and pushes my order, because I'm not going to get fined. And they don't care about the fines. They're paying for the fines with the money that they stole. So I might as well take a ride when they go. And so it doesn't matter what instrument we look at. It doesn't matter what time frame of that instrument we look at. The further back we go, the more manipulation we see. I can go back and further back, and it's the same thing over and over and over again, 24/7. The algorithms, the bots, the big offices with mahogany desks, they're doing it over and over and over again. Remember, these were times that were projected days into the future. And when we arrived at the times, ding, we can already see what are the times for oil tomorrow. It's already there. These times won't change. I come in the next morning and I look to see if a customer purchased or if anybody bought, and then I'll watch the entire morning session at the dots, that the times that I told everybody about the day before. No one cares. No one cares. They'd rather be in a Discord with an exciting moderator with a cool YouTube background and nice lights, and they say things. And I'm over here with my boring chart trying to analyze stuff. Any questions about this? Any market you want me to look at while you got me here? Anything that you want to discuss to pick my brain a little bit before we wrap it up here? Because it kept working. It's doing the same thing it did last week, that it did the week before, that it did the week before that. Right. Look at the NASDAQ, sure. Soybeans, I'm not sure if I have a soybean feed. Let me check. Stanley, if I got one, I'm all yours, buddy. Susan, do you see what happened at the buy times in the direction of the trend? Wouldn't it be nice to see the market go immediately in your direction instead of taking heat? All of these times on my chart, just so you know, all the times on that NASDAQ chart were given out to thousands of people in advance. Every signal that you see on the chart was something that you knew about before it happened. And here's what happened after the fact at those times. Look at it. If you're watching from home, look at it. What would life be like if you knew when to get in the market and try? If you knew when to risk a little bit, right? If you made 150, 200% of what you risked a little more than half the time. It's hard to do, right? Let's take a look at soybeans. What is that? ZS? Soybean futures, ZS. Stanley, what size bar? Hourly, daily, 5 minute, 15 minute? I'm going to give it a shot. Daily? That's my guy. All right. Let's see what we get. See if it loads. I don't think I've ever loaded the data for this, so it might take a minute to populate. If it doesn't load, don't be mad at me. Oh, it's doing something. Oh, there we go. All right, so here's the daily settings for soybeans. Stanley, are you coming to the Omnia conference virtually or live? Maybe. That's the best answer. That's the absolute best answer. Oh, thank you for that answer, by the way. Yeah. So Stanley, if you were coming, and you had asked me that question, I would tell you that soybeans is getting ready to reverse, and that we're probably going to see an up move on April 12th. Using a technique that I'm going to teach on Monday, Stanley, I would tell you that we're probably pretty close to the bottom here at 11:30, and that we should see an up move tomorrow into, if you'll bear with me, into April 24th. I don't care about your grandkids. It's Monday, Tuesday, Wednesday. I mean, I'm sure they're nice. I'm sure they're nice. But there's There's an Omnia sequence playing out right now. And if you've been in my live room, you've seen me talk about this now so many times. Yeah, kids are crazy. Natural gas. Let's take a look at that. Natural gas. I'll take a look right now. Okay. So natural gas on a daily chart. If we take a look, let's take a quick peek at the split. We are down until we're going to revisit the low, it looks like, Bob, between the 11th and the 17th. Most likely a stop run at whatever this low is, 686, on or before the 18th of April. But this is a heavy downtrend right now, with the short at 11.1, the short at 11.29, the stopped out short right here, crossover trade, the next short on the 22nd, the next short on the 21st, and this short here. So we're seeing the same thing, Bob, that we saw on the S&P, but in reverse, right? Do you notice when we got to the 25th, the opening price and the closing price between the 25th and the 4th was almost identical? So down. Yeah, the downtrend's not finished, but that lack of commitment between the 25th and the 4th is the first indication, Bob, that they're kind of coming to the end here. Short term, I'd like to look at a slightly smaller time frame. Yeah, okay. So on the 60, we're still down. Bob, right here, we came up and the move didn't sustain, and now it's dropped down into a pattern 4. You know what a pattern 4 is, Bob? So I have to ask, sometimes people don't know. I would be looking for a puncture of that low on natural gas right now. And then 2 a.m. we should see a surge or a push up. And based on an Omnia technique that I'm going to teach, I think the trend is reversing right here. So Bob, if you come on Monday, you'll understand what's going on over here and why I think we're going to start to come up out of that low. I'm seeing the same things on the higher and the lower time frames, but I can't get into it now. Yeah, we can look at CS again. Sorry. Thank you for those. We'll put it back on the daily. It's not really that distinct, is it? Let me get rid of this for now. That's what I got, Stanley. Okay, cool. Appreciate it. That's all I got. If you guys are interested in the program, the website is backtothefuturetrading.com, and the program we've been talking about is called TachEon Warp. You can learn more about it there, and if you have any questions, email me, Michael, M-I-C-H-A-E-L, at backtothefuturetrading.com. And how do you install the splits, Bob? Before I finish, I want to make sure I cover that, right? We're going to go over that next week. But Bob, I'm using a drawing tool in the Fibonacci time extensions. And what I've done is modified the default. So when you first draw yours out, there'll be an anchor line that forms. You see that anchor line there? When you double click it, you can go down to the levels and edit yours to match mine. My 0 and 100 are gray. My 33 is green and my 66 is red. So gray, gray, green on the 33, red on the 66. And then what I'll do is I'll save that template as default. All right, so now when you draw it, draw from the red signal to the green signal. Oh, what'd I do? Draw from the sell signal to the buy signal. I think I closed the chart accidentally with that default value. So whatever chart you're working with now, you go down Fibonacci time extension from sell to buy. And then Bob, I usually just draw the arrows in by hand on the splits. Does that make sense? I put them on backwards because of the Omnia doctrine, the theory I'll be teaching next week. There's a point where you know the cycle has inverted and some really powerful stuff takes place. It's the genesis of the plugin that I was showing. Earlier today. Yeah, it's part of that whole Mishiga. So it's a pretty simple thing once you learn it to know, and those splits become the most powerful tool available. It's pretty bananas what's going to happen next week. So please come. If it's a maybe, change your maybe to a yes. And it's Stanley, it's going to help you in particular with that hedge that you're looking at. I'll go over it with you in vivid detail. Stuff I can't get into here. Mary, thanks for showing up, by the way. I hope you're doing well. I wanted to just shout out to you and say hi. Thank you so much for hanging out with us. The migraine is starting to flare up a little bit. So that seems about right. Have a let's try that again. Have a great afternoon. It is just pink drink. There's nothing special in there, but I appreciate everyone hanging out here today. Any questions, Michael at backtothefuturetrading.com. You can text me 336-703-7667. We have Skype groups for each of the products now. Let us know if you want to be a part of the Skype groups where you can interact with other customers, share your ideas and your setups, ask for help. And for those of you coming next week, virtually or live, you can come via GoToMeeting, or you can come live, probably a little late to schedule that, but I've got some really special stuff planned for you. And I'll be working the next several days to polish all those presentations up and show you something that has blown my mind and the minds of other people that I've shown it to. So please, if you can, consider joining us. You've got a few days left to jump on here at the very end, and if not, I'll see everybody here next. Swing Strength 8. Swing Strength 8. Hey, Mary. Okay. Have a great night, everybody. Thanks again, and I will see you all Sunday evening, Monday morning, and we'll go from there. Take care. Bye-bye.